That we're tracking for you this evening, but on what's brewing today, micro enterprise lending firm iFinance has secured 310 crore rupees in its Series F funding round. The round was led by UK's development finance institution British International Investment, with participation of Waterfield Fund and existing backer A91 Partners. I has so far raised 1,000 crore rupees of equity. How does the firm plan to use the funds? We discuss that and more with Sanjay Sharma, the MD and CEO of iFinance. Sanjay, thank you so much for joining us on Startup Street today. You know, like I just said, you've raised about 310 crore rupees. After almost 3 years, this fundraise comes. So why now? What do you plan to do with these funds? And also, how much are you valued at post this round?
First of all, we are super excited that we have raised a fairly large amount of money. And in this times in the market, this is truly a good deal to have. The money is needed now by iFinance because we've been growing rapidly. Last year, we grew our book by over 55%. We again are going to replicate that effort this year. And we have seen some tremendous growth in the first 6 months. So this money will go towards expanding our business. It will go towards opening some more branches. We'll be opening 80 new branches. We already have 395 branches. So it will substantially increase our ability to source business in the market. So it's come at a good time. And as I said, that we got a good valuation. While I cannot share the exact detail, but we have diluted roughly 12% for this raise. And most of it has gone to BII, which is a new investor besides the existing investors who have also invested.
All right, so you've diluted about 12% of your stake. Now, in fact, the last time I spoke to you was when you all had announced your results and you saw 55% growth. You're hoping to do the same this time as well. But you had also turned a profit after a short stint in the red. So talk to us about where your revenues are at now, and are you on track to retain profitability?
Oh, absolutely. While during the COVID years, we did take a decision to clean up our books, and we took a loss in that COVID year. But last 2 years, including this year, we have been doing well. We turned in a profit of about 40 crores last year. And this year, in the first half of the year, we have turned a profit of 80 crores. So clearly, we are seeing a complete change in the dynamics of the business, primarily from the cost efficiencies. Delinquencies are back to normal, the way they used to be prior to COVID. So I think this is all getting factored into the large pack. We're very happy to say that, we have started delivering a return on equity of almost 19.5%, which is a good benchmark to have.
Lots of good numbers there, but also give us a sense of your AUMs, your loan book and NPAs. Where are they at right now? And how have you managed to reduce your operating costs?
Yeah, I think our AUM today stands at 3,600, and we will end this year hopefully at something in the range of 4,200 crores. And that is based on the estimate of growth that I mentioned. We are well on target for that number. I think the reason for the fall in our cost of operation is, one is that the volume has increased, the top line is bigger. But also many automation related initiatives that were taken last year and this year are bearing fruit. The productivity of loan officers has gone up. The productivity of our back office has gone up. So it's sheer hard work on various processes to bring efficiency.
But, iFinance is also mulling entering the public markets in FY26. So are those plans on track as well?
Yes, I think FY26 is 2 years away, so still far off. But we will start preparing for that. I think we are in an excellent space in terms of our size and in terms of our profitability to go for an IPO. So I think we would probably look at FY26, where we will plan. Again, in 2 years, many things will happen, and our ultimate plan will depend on how things are more closer to FY26.
All right, absolutely. So right now, FY26 looking like a good timeline. You want to continue to penetrate further into the MSME lending space. So what is attractive to you about the space, and where do you see this market going for you in terms of growth?
Yeah, I think MSME market itself is a very attractive market. And within that, the micro enterprise where we focus on is an extremely interesting and attractive market. We are the largest lender in this space. And I think we have understood this space well enough in the last 9 years to not only make our processes efficient, make our methods of origination efficient, but use a lot of data science and machine learning models to improve our ability to collect from the customers that we have lent to. There are many such things that go towards creating the efficiency in the organization. So I think we find this a very attractive space. There's still a long way to go in terms of penetrating the market. We have given loans to date to almost 800,000 borrowers. And this segment, the estimate is that it is as big as some 67 million such enterprises. So
Right.
long way to go and many miles to cover.
Right, so a long way to go, many miles to cover, and a big opportunity there. All right, Sanjay, thank you so much for joining us on the show today, and we wish you all the best going forward.
Thank you for having me on the show, and have a good night.